Hey, welcome to the weekly multifamily roundtable. Hey, you guys, we see you at home. I don't know where my camera's at. It's over there. Hey, let's try this again from the top. You ready? Welcome to the Do you guys appreciate how we struggle for our art?
Hey, it's live.
Yeah.
Do what you get.
Yeah. We are doing this without a net, guys. So here we go. Next try. Welcome to the weekly multifamily roundtable, where each week we three amigos, Anthony, Dan, and Rodney, get together to try and learn something new about multifamily investing. Whether you're new to apartment investing or just old and crusty like us, if you're looking to take your real estate investing career to the next level, then you are in the right place. Come join us as this week we set off to learn more about the Twin Cities market and why it is so sweet. Maybe along the way, we'll also have a little bit of fun. Maybe. Now, if you're opposed to fun or learning, you best get on out of here because the weekly multifamily roundtable is leaving the station. Dan, give me that toot toot.
Toot toot.
Rodney, get everybody all aboard.
All aboard.
All right. So we struggled through that intro, but here we are. We made it through out the other side unscathed. We appreciate everybody taking the time to be with us here tonight, if in fact you are listening to us. We got a pretty cool episode here, actually. We're going to be talking about the Twin Cities market, Minneapolis, St. Paul, and the surrounding suburbs. If you've never thought about the Twin Cities as an investable city, well, tonight we are going to change your mind. We're going to drop some knowledge bombs on you. Now, why are we doing this? No, really, why are we doing this, guys?
Oh, it's all to educate and should I say entertain?
Yeah. Edutainment. We're seeking to educate and entertain simultaneously. Yeah, edutainment. So
we like to say that Minneapolis, St. Paul is kind of like a sleeper market.
Yeah.
A lot of people don't realize what a little gem it is. I'm trying not to be too cheesy, but really it's like one of the best markets out there, but it's not one of the ones that you hear people talking a lot about.
Exactly. If you're a new active investor, you're looking at potential markets, you're still trying to decide, you're probably looking down in the Sun Belt, right? Like that's the obvious place, maybe down in Georgia or Phoenix or down in Dallas and Austin. Like these are the markets that everybody kind of knows and talks about, and you're probably seeking those out. A market that you maybe haven't thought about before is the Twin Cities up here in Minnesota. We're going to talk about why that is tonight. Dan and I, we invest heavily. Our entire portfolio is here in St. Paul. We love this market. We're super big fans of it. And we don't want you guys coming here and competing with us, but we do also want to brag about how awesome our market is. So maybe it's going to, illuminate in your mind a new alternative market to start looking into. Now, Dan and I have no statistics or facts or anything to back up what we're saying here tonight. Rodney's bringing all the numbers. So Rodney, where should we start this conversation?
Well, I think that we should start on just if we talk about the market as a whole, a lot of metrics are measured by year over year rent growth, right? And we had a guest on a few weeks ago, Logan Freeman, that was really hot on Kansas City, and that's where they concentrate. And he made a good point. He talked about investing in your own backyard, and the year-over-year rent growth in Minneapolis has been stellar. And I didn't realize it until I started looking into it that it actually, unless the newer statistics have changed, it is higher than Kansas City, which makes it a great market.
Rodney, I'm curious, when we're looking at like good markets, what are some of the top metrics that you look at to determine what makes a market good to invest in?
So some key areas to look at would be employment, unemployment, both job growth and unemployment, and year-over-year rent growth. We had talked about earlier about the new units coming online, and Minneapolis has a lot of new units coming online. And I've talked to different people that have had different thought processes on whether new units coming online is a good thing or a bad thing. And you had mentioned earlier that it's a good thing. And do you see that as a key indicator for local growth? I mean, obviously they're not going to be building if they didn't think that they could fill those units.
Yeah, let's before we tackle that, let's try and create a little bit of structure here. because we're flying way off the cuff here, and I don't know where we're going to end up. I know it's good. I know it's going to be awesome. So let's identify some top metrics, and then let's walk through them one by one, and in relation to how Minneapolis and the Twin Cities perform. So you mentioned rent growth. I think that's a great one. We'll tackle that. Employment rates, job growth, absorption rates is what we're talking about here with in terms of new products coming online versus how many of those are actually getting absorbed by the community. So if you have too many buildings coming online, not enough people, that's not a good thing. And then one of the other ones is the underlying makeup of the economy, the macro economy. Like, is it all focused around one industry like Detroit, or is it very diverse? Is it the Silicon Valley of the Midwest? So those are some things that I want to kind of walk through one by one by one. What are some other metrics that we look for in a city or a metro before we invest there?
Income. That's
Yep.
another one. And I think everything is going to always come back to the job market. That's going to be the fundamental thing that influences all the other metrics we're looking at. If you don't have a strong job market, you're not going to have increasing rents because people aren't going to be getting paid more. No one's going to be incoming to the city if there's no jobs. So jobs are kind of like the immediate driver. And then all the other metrics we look at are going to be essentially deriving their value from the job market.
Oh, that's a good one too. What you just touched there was population growth.
Mm-hmm.
And like one of the things that's so cool about real estate is that the underlying mechanics of it are so simple. It's a supply and demand scenario. So as long as there is strong demand, and that's what the job, the economy, the population growth, that's what those would indicate, mm-hmm. then your supply is going to continue to increase in value, assuming you don't have oversupply, right?
Mm-hmm. Another one that we should note as well that we haven't is the average home cost in the area. Yep. Because what you want to look at there is it cheaper to buy a house or to rent an apartment? And if the houses in the area are very expensive, then it's probably going to be more expensive to own a place than it is to rent, which is a great situation to be in if you own rental properties.
What was that, Rodney? I missed that.
Well, do you think that that's always a deciding factor? Because there's been statistics show that a lot of boomers are moving into rentals because they don't want to have the responsibility of owning a home.
I think the average home cost is not one that I look at as being like super important, but it helps frame the conversation, and you can start to understand median income, how it relates to the affordability index. Is it cheaper ultimately to, because this is what I think millennials are doing, is they're not tied so much to the emotional bond to this idea of buying a single family home with a white picket fence. And so they're making their decisions a bit more on flexibility, freedom, and does it actually pencil out in the long term? Is this actually a better financial decision? I think our generation is actually pretty savvy in that way. And so if the numbers do make sense, so like I can go buy a house for, like, I could rent it. I could go buy a house with a mortgage that's $500 a month, or I could go rent for $1,500 a month. It's going to skew the conversation. They're going to go and buy houses, I think.
Mm-hmm. Sure. Do you think that the mobility mentality has a factor into it, or is that, or do you think that's tapering off? And what I mean by that is, the generation of like the early boomers, the people that came out of the 40s and the 50s, they got a few jobs and they only worked a few places throughout their entire career, whereas current generation, if I spoke to a couple of people and they're like, as soon as I get a job, I'm looking for the next job, because they're not driving they're not climbing the ladder where they are. They're climbing the ladder from place to place, more of hopping from rock to rock, right? And they look at housing in a similar fashion, being able to, at the drop of a hat, move to another city to get that job that's really great. So do you think that that's still a factor, or is that changed?
Yeah, it's huge.
Yeah, definitely.
It's huge. I think these days people are really comfortable with the pay to use as opposed to own model, with Uber, all those little scooters that are all over a lot of major metropolitan areas, where you just, scan something and you pay $1 to ride a scooter, for a couple miles. They've got that with bikes too, Netflix, Amazon, iTunes, all this stuff. You're just paying a fee to use something for a period of time, but you don't actually go and buy movies. You don't buy CDs. don't even buy clothes anymore. My wife used a service called, or was using a service called Rent the Runway, where it's just a subscription service to rent like high-end designer stuff, the stuff you wear once or twice a year. So millennials, and I think even other generations, are really getting comfortable with just paying a fee to use something as opposed to owning it.
Yeah, I want to tie into a really interesting article I read recently, and it's timely with COVID and then working from home. Minneapolis is ranked in the top 10 for was it most friendly for remote working, and they had some pretty funky. It's a pretty funky article. Like it was kind of a stretch in some of the metrics that they were measuring, things like density of coffee shops, quality of Wi-Fi, and things like that. Right? You're like, I don't know how meaningful that really is. But for all intents and purposes, Twin Cities was still in the top 10. So I was like, that's pretty interesting.
I always told my wife, I said, when we retire and I would love to at one point ditch the house, move to the city, someplace like Minneapolis that has that high density of coffee shops and so forth, and be able to walk downstairs and go to the coffee shop across the street, walk a block to the grocery store, or get on some sort of transit and maybe go to the museum or something like that. That would be I don't know if that's going to be a short-lived deal, but it seems like it would be a fun thing to do. I don't know how else to put it, but I mean, I love to go sit at the coffee shop.
You're talking about Dan's life right now. That's what Dan does every day, right?
No, I don't work at coffee shops, but I'll tell you that my wife and I do really enjoy the fact that if we want to feel like we're out and about, all we have to do is walk out our front door, and we can just go walk the dog around the neighborhood, but we're kind of in the mix of things and we feel like we're going out and doing stuff. Even if we just go walk the dog and then go back, sit on the couch and watch Netflix. But just having that proximity to all those fun little things is huge.
Got a cool energy.
Yeah, it's enjoyable.
All right, so we got a pretty good list of metrics that we identified as being key when we're looking at the quality of a metro or an MSA, let's say. So let's take it from the top. Let's talk about rent growth. Rodney, you kind of alluded to this. You had some statistics there showing, I think, that the average rent growth for the Twin Cities was north of 5%, and compare that to other really strong markets like Kansas City, which is consistently ranked as one of the top 5 cities for multifamily investing. I think that was only coming at high 4%. And so that's really surprising to a lot of people to find what is happening up there in the Twin Cities that leads to such strong, and here's the other part that Dan can talk to you better than I can, consistent rent growth, even through tumultuous times like in 2008.
Yeah. So if you factor that in with very low vacancy rate, it equates to a high demand for housing. And so why is that high demand for housing? And it's a lot of the factors that we discussed earlier with the availability of amenities. But I think you mentioned earlier, what was there, 16 Fortune 500 companies located in Minneapolis, St. Paul area?
Yep, that's correct. And the largest privately held company in the U.S. Cargill.
Yeah, all of those things are driving factors that make the city desirable. And we had discussed earlier about where Minneapolis, St. Paul area is a unique environment because there's a lot of people moving from surrounding states to the Minneapolis, St. Paul area. Whereas you look at a lot of the other metro areas that are, a lot of them are situated around the coastal areas, and those areas are typically populated by people moving from other metro areas. So Minneapolis, St. Paul has a unique environment in that regard.
So you're saying it pulls more from the rural wings of, say, the Dakotas, Wisconsin, the Iowas, Nebraskas, and not necessarily pulling from the other major metros like Chicago, or I was going to say Des Moines, but that's I don't know if I'd say that's a major metro.
That there's that movement too, but if you take where I live, for example, I live in Southeast Minnesota, and a lot of the people that graduate from high school and maybe they attend local college here, just north of here, maybe they don't. A lot of them end up in Minneapolis. Mm-hmm. And I don't see a lot of them heading to other parts of the country. There are a few, obviously, but the vast majority of the kids that I've spoken to head to Minneapolis. And I think that's the case for a lot of the area, because you get over in South Dakota, North Dakota area, what major city over there besides Fargo that you would really
Major city.
Yeah, major city. And same with Wisconsin. I mean, you have Milwaukee, but that's the whole Milwaukee slash Des Plaines and Chicago area, and that has its things. But the nice thing about Minneapolis, at least from my perspective, is that it's not so huge that it's intimidating. That makes sense.
Yeah. So here's a couple of other really interesting things. I don't know what the case is with Milwaukee, but the Twin Cities does have an international airport that's consistently for like the last 3 years ranked as the top international airport in the United States in terms of like quality and timeliness and like all the factors that they measure that against. And then you look at, say, like the education system. One of the things a lot of people might not realize is that the University of Minnesota, which is just one of like 52 quality universities that we have in the Twin Cities, the University of Minnesota is the 5th largest university in the country, like in terms of population. It's surprising to learn that, but like a lot of people are coming up here, a lot of young millennials. And so one of the big strikes that we have against Minnesota is obviously our winters, right? Like we're not competing with California and Texas in terms of quality weather. And we're maybe not even competing against those places in terms of like quality nature. We do have Lake Superior up north, just a couple hours away, but by and large, that's the big detractor, is like we are up north. It does get cold, but that's only one reason why people would choose not to live here. Whereas there's a lot of other reasons why they do choose. So Dan, maybe you can talk about what some of those other strong reasons are.
Yeah, I think, the varied economy that you already kind of mentioned, it's a poor way of phrasing it. The diverse economy is.
Well, you were talking about cost of living too.
Yeah, cost of living. And then there's also something to be said about the recreational resources of an area. And Minneapolis is very well known for its recreational resources. Obviously, there's tons of lakes. We've got a nice bike culture. We got something called the Greenway, which is this big network of bike paths, and there's all these bike lanes. So it's
consistently rated the most bike-friendly city in the U.S.
Yeah. So I think that kind of stuff is a real big draw for people, especially for those kind of people who are really lean into the flexible living lifestyle. They don't want to own a car. They just want to have public transportation, which we've got, but good public transportation, or maybe they just want to use the bike or, something like that. So it draws people in for that reason as well.
You guys might be surprised to hear this, or you might not be because you live here, but I was kind of surprised because it does kind of take you off guard at first, is that Minneapolis was like 2 years ago or 3 years ago now rated the healthiest city in the US. Like our prevalence of heart disease and our stress, like what do they call it? Quality of life is very, very high. And part of that is we have a very low cost of living. So the cost of goods like gas and groceries and all in living, they're low by comparison to our very high median income, which I think, Rodney, you were saying was projected to breach 90K by 2023.
Correct.
Right.
Was that for Minneapolis or for the state?
No, that's Minneapolis.
That's got to be Minneapolis. Yeah.
And you look at the spread between the median house income and that median income level, and it makes it very affordable because people have more.
You mean the median house price?
Yeah. What did I say?
The median household income versus the income. So you mean the house and the income?
The income versus income?
Yeah. There's a lot of income. It sounded good.
I got where he was going with it, but yeah.
The median house price and the median income price, and that spread allows for more disposable income, which allows for the more recreation and being able to do things rather than just hibernate in your house because you have bills to pay.
Mm-hmm.
So it offers a higher quality of living.
Yeah.
Yep. So there's two other factors here I want to touch on. We talked about the unemployment rate. That's always a really big, red flag over when you're looking at a metro is saying, okay, how many people are actually employed there? You look at Detroit, maybe their unemployment rate's not so good. So we always want to compare that against national averages and against trends. So we always want to say, like, is the unemployment rate getting worse over time, or is it getting better over time? And then also looking at vacancy rates. And on both of those, I don't know if you have the vacancy rate metrics in front of you, Rodney, but I think you do have some information on the employment rate.
I do have vacancy rate is current. Well, for Q4 2019, which is the newest information that's out there, is at 3.1%, which is higher. It was in the high twos and earlier in the year, and it's only gone to 3.1, but that's still below the national average.
Mm-hmm. And I think it would be interesting to see the breakdown of asset classes there, meaning like what are the vacancy rates for A class, B class, and C class? Because I'd be willing to bet the type of stuff that we invest in, the B and C class stuff, is really strong. And if there's any increase in vacancy in recent months or in the past 24 or 12 months, I'd be willing to bet it's pretty much all coming from the A class stuff. I put my money on that.
And I just happen to have that somewhere.
Oh, you do. Let's see if I'm right. But while you're looking there, I think it's worth noting that I think, like you mentioned before, fundamentally, the biggest piece that really matters is employment. And, if employment is high and if there's a lot of different types of companies and you see a net migration to a city, meaning the population's increasing, which is going to be driven by employment and job opportunities, that's going to support all these other metrics that we're talking about.
Yeah, and let's give an idea of like those 16 Fortune 500 companies that we're talking about here. We have like companies like 3M, Target, Best Buy, General Mills. And so that just right there, those are 4 uncorrelated industries effectively, right? Those are all really big major players in their fields. Like, who's bigger than Best Buy? Nobody. Who's bigger than 3M at what they do? Nobody. Yeah. Right. So like these companies are very, very big and substantial, and they've been here for a long time. So they're not just, this is I think one of the reasons why the Twin Cities is a sleeper metro for a lot of people, is because we never have this explosive, crazy growth. We just year over year, we're just over here chugging away, really solid, consistent growth. And even when you like backdate and look at historical data from like 2008 and the financial crisis, like we were still just chugging along, doing our thing. So with a lot of these hot markets down in the South, one of my fears is always, things the reversion to the mean, right? Things that rise really quickly eventually got to come back down and revert back to that mean growth. And that's just kind of like a natural law. And the Twin Cities, because it never like gets too far ahead of itself in terms of growth, it never has to come back to like correct.
Yeah. And I think it's worth kind of doubling down on that point, because like we keep saying, a diverse job market and a diverse industry is important, but why is that important? Detroit. Right. That's the example. Like, you don't want one really good big industry because you never know what's going to happen. But if you've got 8 to 10 different industries that are not correlated, any number of them could fall apart. But fundamentally, it's not going to impact the job market that much if you've got a bunch of different uncorrelated companies in the area. So,
I don't have a breakdown on the vacancy per class. Sorry, what I did have was a breakdown on cap rates. But the fact of the matter is that what Anthony was talking about is this steady growth. There's a lot of hot markets in the South, and Memphis is one of them, where if you look at the job growth rate, it's been fairly flat. But yet investors love that city because there are consistent returns because the rent growth is there, but the job growth isn't.
Yep.
But there's a lot of major industry there that keeps that increase in what the median income going up.
Yeah, Memphis is a really good example of a city that I'm not a super big fan of, because you look back in the financial crisis, it was the foreclosure capital of the country. Like, it had more foreclosures than any other major metropolitan. Now, it's starting to improve. I lived in Nashville for a bit. So when I lived in Nashville, you look over at Memphis and you're like, Memphis sucks. Like, don't live there. Live in Nashville. And Nashville, I have a lot of confidence in. That's a really cool, awesome, has all the fundamentals for a strong city. I just don't see it in the same way in Memphis. I see a little bit more of like a hope and a dream, and like this idea that, okay, if this continues trending upwards, this city could be something, but I just don't see the strong underlying fundamentals personally. But that I haven't looked super deep either. So I mean,
Nashville is a great city, but there's a lot of things that are overpriced there, just like Dallas, because it's hot.
Yep, exactly.
Than they should for assets. Which, if you're trimming your earnings and your fees, then you can justify that to the investor. But we don't make any money in the deal. So
I will point out something else that makes the Twin Cities so darn good. And I'm surprised nobody's mentioned this yet, because we're the only city in the country that has this thing. And it is, damn it, you guessed it. Yeah. It's the Mall of America. Yeah. We have the Mall of America.
You know what's interesting about that?
Big of a deal, but
that place gets more foot traffic than Grand Canyon, Empire State Building, Times Square. Yep. As far as like a tourist attraction, like we don't think of it as a tourist attraction because
we don't go there. Yeah,
but like that place gets more traffic than all those places combined. Well, not combined, but
I
like,
do go there occasionally. But I can tell you that I find the door closest to where I want to go, and I'm beeline there, beeline out.
Yeah, but for people who aren't from here, it's a big deal.
And you couple that with our international airport, which is literally 10 minutes away.
Yeah, just about.
Right? Like you pretty much land on the Mall of America.
Yeah. And you jump on the metro and ride it over there and
or you could ride the train. So you could land in the international airport, go to the Mall of America, get on the light rail, ride it all the way downtown Minneapolis for $2, and then, go to see a Twins game and then ride it back, and you've had a good little afternoon. That's a pro tip for you guys in Nebraska if you're looking for something to do to get out of Nebraska.
Right. That could be an afternoon trip.
Yeah, it could be. Yeah. I mean, to be very fair, I am not recommending Mall of America to people in general. Like, I'm not a big fan personally, but it is a very large source of tourism, surprisingly. So there's that.
Yeah, we do have a good food scene here as well. For the foodies out there, Chicago gets all the credit in the Midwest for being like the foodie central. But people who know their stuff will appreciate how many good foodie spots there are in Minneapolis.
Well, the diversity,
hidden gems
of the culture is what really sets the bar high for Minneapolis. I mean, you can find literally almost anything there.
And something that Anthony
and I all good food
on all the time in our podcast, and like anytime we have a chance to talk to people, we harp on this, and that's about managing your downside and looking at worst case scenario. And Anthony kind of mentioned it before, how this area performed during the real estate crash of 2008, but just to provide some like actual data for that, I did some back testing, and I looked at B and C class apartment buildings in this area, and I looked at how they performed during that period. And like we mentioned before, there's this slow and steady rent growth year after year after year after year. And all that happened during that period is, instead of seeing rent growth for 2008, 2009, it was basically just flat. Like, didn't go down, but it was just flat. And what also happened there is vacancy actually decreased, which makes a lot of sense because everyone lost their home and they became renters. So demand for rentals increased. So during the real estate crash of 2008 and 2009, those properties actually cash flowed better during the real estate crash, right? So if that doesn't spell out very little downside risk, then I don't know what does.
Recession resistance.
Yep, exactly.
Hey, we're hitting the top of the hour. There's one more thing I want to ask you guys, and that there is in the Minneapolis St. Paul area, there is a trend towards these new micro units. Have you guys heard this?
Yeah, that's starting to trend in a lot of major cities now. The move towards like micro living.
Opinion on that?
I don't know how that's going to bode well if everyone's all of a sudden working from home. I feel like that.
What I was wondering, because if they're banking on that they like a smaller area with more amenities, but yet, you're stuck at home. That concept works really well if you're always out and about.
Yeah. Yeah. It doesn't work well if you're in a shelter in place and you work from home. And if you live with a wife or a girlfriend or a significant other of some kind, and you're both working from home, I don't think you want a micro unit. I think you want bedrooms, you want some space. So I don't know if that trend's really I don't think it's gonna really accelerate in the next 12 months. If we kind of get past this whole Rona thing and people start living their lives normally again, I think that that trend's probably gonna pop back up because it makes a lot of sense. But
so let's break this down from a demographics and like understanding the psychology of what's happening with the millennials. So we know a couple of things about this group. One is they are pushing back their how old they are when they get married, right? So they're waiting longer to get married. They're waiting longer, significantly longer than the previous generations to have their first children. And tying into that is this kind of movement towards minimalism or away from things and valuing flexibility. And so these micro units, they make a lot of sense when you're young and maybe you have just a significant other, a girlfriend, and you guys just want to like downsize the amount of things that you have. You still have access to flexibility and freedom. As soon as you start having kids, that conversation changes very, very quickly, because now, a 300 square foot apartment or living situation with a kid running around, that's a different thing. And I think our age demographic is just now getting to that point where we're going to start seeing more and more children. And so that movement back towards, okay, we need a bit more space. I don't think they're going to go to the McMansions like our parents did or during the 90s or anything like that. But I do think they're going to start valuing, we need a little bit more space. They'll still skew small, but I don't think that long-term, that micro unit is going to, I think there will always be demand, because I think there will always be a younger generation doing a similar thing coming in behind them. But I think our millennial generation is right on the cusp of leaving that station.
agreed.
Well, this has been a good conversation. Do you guys have any parting comments before we ask people to click on the subscribe button and hit the bell for notification and come back and visit us again?
Yeah, what I'm going to say is this: come back next week, because we got a great show lined up that next week. I don't know what it is, but I assume it's great because we only deliver greatness. 2, I know we just spent this entire show touting the benefits of the Twin Cities, but please, please, please stay away. You don't want none of this. It's cold. Our pipes freeze. Have you ever had to deal with a frozen pipe down in Tennessee? No.
Oh yeah.
You got sweaty pipes, but you don't have to deal with the burst pipes, and you don't have to shovel snow. Oh my God. So I know it's a little bit hypocritical to tell you all the reasons it's really great, but please stay away. Phoenix is for you.
We want you to invest here, but we don't want you to come live here.